Let's bring in Scott Bauer. I want to bring in the CEO of Prosper Trading Academy. He's here to talk currencies and treasuries. Scott, a busy week for financial markets. Let's begin with, well, first of all, thanks for sharing part of your Tuesday and how, I guess in some ways one could argue that the eclipse yesterday, the main event, was somewhat bullish for stocks. It helped keep the focus away from the fact that we had rates to new highs for the year.
Yeah, it also probably contributed to one of the lightest volume days that we had across the board.
Everybody was outside looking up.
20-25% below normal. But yeah, there's I guess a little bit of optimism going into the CPI print tomorrow. Certainly at the end of last week, we were kind of on our heels a little bit, a little bit of nervousness with where rates were going, with the 10-year approaching 440, which we actually topped out yesterday. I know it's down a little bit this morning.
Yeah, Scott, and also you've got the dollar. I feel like a pretty good reflection of this hearty debate, right, that we've seen a lot of speculation out there in terms of when the Fed's going to cut, how many times, and ultimately, especially following comments from officials yesterday, looks like still expecting 3. The base case I'm hearing justified at the very least that we get 1 to get things started right now. But where do you lie? In what camp do you sit as far as expectations and how many we'll see this year?
I still think that the data coming in, Ben, is, I don't want to say smoke and mirrors, but I think there's more to it underneath the actual numbers that lead us to looking at the economy weakening a little bit. So I think we will get 2 to 3. I wish I could say with whole confidence we would get 3. I'm going to say 2 to 3, though. We're not going to get one before June. June is right now a little bit under 50-50. That's been actually coming down a little bit. But, tomorrow's CPI print will certainly be somewhat of an indicator.
Scott, I mentioned in terms of the focus here being on rates, right? I think the data, as you pointed to, CPI, PPI later this week is going to be pivotal, possibly in terms of helping us determine the Fed and their next move, or at least the lean, right? So, but moving on, I also mentioned how it's a busy week for financial markets in general, right? Globally as well. Let's begin with Japan, the yen, which continues to hold near these lows, so supporting the U.S. dollar. But we're looking at the first state visit by Japan's prime minister, first state visit we've seen here in the U.S. in 9 years. This has begun. And I'm hearing again that kind of pushes back on some of those expectations that we'll see intervention. They don't necessarily want to weaken the U.S. dollar during these meetings.
Right, during the meetings. But, 2 weeks from now, 4 weeks from now, I think those talks are going to be, or that rhetoric is going to be back on the table. We did see this happen months ago, and then it kind of went away a little bit. Now it's back on the table again for some intervention, and then that may be capping the dollar just a little bit, even though the yen has weakened quite a bit versus the dollar. That may be putting a cap on some gains, because there is that thought process that whether it's after this meeting or not, the intervention talks are going to begin again.
Yeah, I think a lot of people are in anticipation of that, and we're well aware, for those who have seen it in the past, the impact that can have on the currency market. So we're expecting some volatility in reaction to, and tough to position yourself on the short side, considering the long in the tooth trend that we've seen lower, and also expectations that, again, we're going to get a rebound in reaction to that if we get that news. Let's talk a little bit about kind of broadening the focus. You've got China. Looks like CPI and PPI headed our way today, tomorrow, overnight. It looks like Reserve Bank of New Zealand expected to leave rates unchanged at 5.5%. No expectations of a cut there. We have some data out of Europe as well. GDP, it looks like, UK data coming our way, but also the ECB as well. Bank of Canada tomorrow. I mean, the list goes on. I mentioned earlier, Mexico has CPI data today. Where's your focus here right now as you kind of broaden it and move away from the Fed, the dollar rates here in the U.S.?
I think the ECB and what Christine Lagarde has to say, expectations still are, Ben, that they are going to cut. Probably not right now, but that they will start cutting in June. Expectations are about 90 basis points of cuts for the ECB for this year. Their model, or their data that they're receiving here, their inflation data is lower than it is here. And that's why the opportunity, or the probabilities, I should say, of rate cuts there are higher. And rather than higher for longer mantra that we have here, what we're seeing out there is that it's going to be sooner than we get here. So I think, listening to Lagarde and what she has to say, is she going to be as hawkish as what we've seen of, our Fed here? I doubt it. I think they're going to be very cautionary. That's the one that I am focusing most on, though.
Okay, I'm pretty sure that we have you on record as predicting that the ECB will be the first to act, the first to cut. So we'll see if we get any clarity from Lagarde this week, and if it still kind of leans in that direction, as is the case here. Scott, appreciate you joining us here to talk currencies, treasuries. As mentioned, a busy week for traders this week, that's for sure. Thanks to you, Scott, joining us at Prosper Trading Academy.